Hi, this is Chris Diodato. So, options have sparked your interest? Well, OptionMillionaires.com, you've come to the right place. So, options. What are these things? How do they work? And how could they offer investors and traders perhaps an advantage over their non-optioneering peers? So, we have some investors right here. We are investors, we are traders. And as traders and investors, we like flexibility, we like to customize our strategies. We want it all. We want it all, and we want people to provide us the instruments to trade. So right here we have a couple sad investors. Why? Because they don't know about options. All they know about is stock, underlying stock. And honestly, there's only two things you can do with stock. First, you can buy, hope a stock goes up, or you can sell/short sell, hoping a stock goes down. Okay, that's all you can do. You can't really customize your strategies. It generally involves a lot more of your own capital instead of, say, a little bit of your own capital. You really can't leverage. Like, you can buy on margin, but then you have to pay the interest, and really you can only do about 50% margin by law. Some of us want more than that. So we have these sad investors here. They all have their own goals that can't be accomplished with stock. The first one, he has stock, he's made some money, and he wants to protect his profits. What could he do with just stock? He could only sell it. And he doesn't want to sell it. Why do you want to sell a winning position? He probably thinks that the stock's just going to go down a little bit, and he just wants to make sure that he doesn't lose a lot, and then he thinks it's going to go back up. So you don't want to sell it for that. You just want to protect yourself a little bit. With options, he can have that. With just trading stock, he can't. So with options, this guy, he could do something that would be called a protective put or a covered call. For instance, just two of them. So now this sad stick man is a happy stick man. This guy, he strongly believes that his stock will decline, and he wants to speculate. So while this one wanted to hedge his risk, this one wants to play around and hopefully win big. Well, options, they already have built-in leverage to them. So this guy, he can actually do something to customize his own strategy, and he can bet a little bit of money, and if he is right, he can make a ton. If he's wrong, he'll lose a little. He could do stuff like vertical spreads. He could buy a call. Well, he could sell a call. He could buy a put. And I'll go into all this lingo in the other videos. But just for now, just to introduce you to everything. He could do ratio spreads. He could do skewed spreads. He could do anything with options. Options offer you so much flexibility, and for that reason, our sad stick man is now, once again, a happy stick man. And then the final one, this guy, he thinks that his stock is going to move sideways for a month. Well, with buying or selling, either of them, you can't profit in a sideways market. You just wait and you lose time. That's boring. With options, we can profit off of a sideways market through strategies such as condors, iron condors, butterflies, I said calendars, double calendars, diagonals, double diagonals, and all kinds of different things. And we'll go into those another time too. So because of options, these investors are happy, these traders are happy, and they have the flexibility and they can trade the way they want to. And with options, you could be one of them. You could be a happy stick man. Okay, so what are these options? Say we got our buddy Ralph over here, and Ralph, he is looking at a stock, and let's just move this for now. Good old Ralph, he's looking at a stock, and it's trading at $50 today. His stock is XYZ. He thinks that's going to go up to $60 by next month. That would be very nice. So what could he do? Well, if he only does stock, he can buy it for $50 with $50 of his own money and hope it goes up to $60. So the best that could happen is it goes up to $60 and he makes $10 on it. The worst that can happen is good old Ralph is completely wrong, and by next month the stock goes down to zero, and poor old Ralphie, he lost all $50. There's got to be a better way. There has to be a better way. So what Ralph is going to do, he's going to get a contract. He's going to talk up with this guy Bill, and he is going to write a contract, and he's going to buy this contract for $1, and it's going to give him the right to buy a certain number of shares at a certain price and before a certain date, and that would be called a call option. So he's going to get a contract that says, by next month, I am going to buy the right to buy this stock at $50, and and if the stock goes up to $60, he's going to still get the gain. He will, let's see, he spent $1 for this contract, and with this contract he's able to buy the stock at $50 no matter what the price is in a month. And if the stock goes up to $60 by next month, he's going to make $10, just like the other one, minus the dollar he paid for the contract, so he made $9. He made $9 on a $1 investment. He made 900% with that little contract. If he just bought the stock and watched it go up to 60, he only made 20%. We can get these 10-baggers, these huge gains with this. So that is what a call option is. It's getting a contract. You buy a contract to get a certain number of shares at a certain price and before a certain date. You have the right, the option. If the stock, say, goes down, you simply just say, I don't want to exercise my option to buy it at $50 because the stock's lower than $50. What did you lose? You lost $1. That's your maximum loss. And the converse to the call option is a put option, which is you just get a contract to sell a certain number of shares. Notice I said sell at a certain price and before a certain date, and that is called a put. And we will get into these instruments much deeper in the other videos, but consider putting options into your portfolio, add diversification, maybe turn that lackluster return into something big, and learn with us at optionmillionaires.com.